Hi, welcome to Dig Into China. I'm Dong Xiong. Sky-high housing prices have been a long-standing grievance in China, particularly among the younger generation. Today, even young people in third and fourth-tier cities struggle to afford a home without parent support. And the challenge is even greater in major cities like Beijing, Shanghai, Guangzhou, and Shenzhen. One of the most straightforward measures of how high housing prices are in China is the price-to-income ratio. In the 2020 global ranking of major cities by this metric, 5 out of the top 10 cities were in China, including Hong Kong. This means China alone made up half of the list. Against the backdrop of skyrocketing housing prices, many issues have been blamed on this very problem. For instance, the reluctance of Chinese people to have children is often attributed to high housing costs. People feel they can't afford a home for their children or a marital home, leading to a decline in birth rates. Similarly, China's low consumption levels are frequently blamed on unaffordable housing, with many believing that high housing prices are squeezing out people's spending power. Is this reasoning flawed? Not at all. It aligns with both economic principles and common sense. Many people avoid marriage because they can't afford a home, and others refrain from spending due to the burden of hefty mortgages. Since around 2021, China's housing prices have been on a continuous downward trend. In 90% of major cities, prices have dropped back to 2020 levels, and in 24% of cities, they've fallen to 2014 levels. The decline is undeniably steep, but the brighter future people once hoped for hasn't materialized. The expected rise in birth and marriage rates with lower housing prices hasn't happened, nor has the anticipated boost in consumption. Instead, birth rates have continued to fall, consumption has declined further, and life has only become harder for many. Why does the drop in housing prices seem to be turning into a problem rather than a solution? Why, despite the long-awaited real estate crash, has the reality diverged from what people anticipated? In this session, I'll delve into this question. For a long time, the focus on complaining about high housing prices has overshadowed another important aspect: the benefits they bring. Rising property values have, for an extended period, served as a major source of income for many Chinese people. This situation contrasts with other countries, where income sources are often quite different. To gauge the current level of China's economic development per capita, the most straightforward measure is per capita GDP. By this metric, China is classified as a middle-income country on the global scale. In 2023, China's per capita GDP was $12,614, almost the same as the world average of $13,138. Conversely, the actual income levels for many Chinese people are well below the global average. While the Chinese government does not release average wage figures, it provides data on per capita disposable income, which offers a better gauge of citizens' income levels. In this context, China's per capita disposable income is considered to be on the lower middle end rather than at a mid-level position globally. According to data from the National Bureau of Statistics of China, the per capita disposable income in China for 2023 was 39,218 yuan, which is approximately $5,446. This figure is relatively low. To provide some context, consider that Argentina's per capita GDP is $13,650 with a per capita disposable income of about $11,000. Similarly, Russia's per capita GDP stands at $13,817 while its per capita disposable income is around $8,000. These countries have per capita GDPs comparable to China's, but their per capita disposable incomes are much higher. Comparing with India further highlights the disparity in China's per capita GDP value. China's per capita GDP is roughly 5 times higher than India's, yet India's per capita disposable income is around $2,350. In contrast, China's per capita disposable income is only slightly more than twice that of India's. This significant gap indicates that China's per capita disposable income is not in proportion to its per capita GDP. Certainly, relying solely on per capita disposable income to assess income standards in China can differ from people's everyday experience. No one in China feels that their wealth or income is only half that of Argentinians or just twice that of Indians. Most people would also likely disagree that China's per capita income is lower than Russia's. One reason for this perception gap is that many high-income earners in China's large cities who are also active internet users may distort the overall view of average income levels. However, this is not the primary reason for the mismatch. Another factor is that Chinese people are not as impoverished as it might appear. Although China's per capita disposable income is relatively low, its per capita wealth is quite high. According to World Population Review's Global Per Capita Wealth Chart, while some countries have higher regular incomes than China, their per capita wealth is much lower. For example, Russia's per capita wealth is only slightly below China's, and Argentina's wealth is notably lower, similar to levels found in many African countries. How did Chinese people accumulate such significant wealth? Partly, it's due to their frugal lifestyle and low levels of consumption. However, a major factor is real estate. While high housing prices are frequently criticized, a key aspect often overlooked is that much of Chinese wealth does not come from wages or per capita disposable income, but from rising property values. For many, housing prices appreciation is a major source of income, and in some cases constitutes a large portion of their overall wealth. In 2020, People's Daily conducted a survey showing that the majority of urban residents' assets in China are physical, with real estate being the largest component. Real estate accounts for 74.2% of physical assets. As a result of high housing prices, the average household asset in China reached 1.88 million yuan. Additionally, 30% of households with two properties have fixed assets totaling 3.18 million yuan. To illustrate, a household earning 20,000 yuan per month would need to work for 159 months, or about 13 years, without spending anything to accumulate this amount. It is evident that not 30% of urban households earn 20,000 yuan monthly, and it's unrealistic to expect them to save this amount without any expenditure. The 3.18 million yuan in household assets mainly stem from property appreciation, not from earned income. Many Chinese, particularly in the middle class, will find that their wealth accumulation is largely due to increases in property value rather than their salaries. The disparity in wealth is often shaped not by income alone, but by earlier decisions, such as choosing a city where property prices have risen significantly and whether one was willing to take out a mortgage to invest in real estate. The increase in property value has been a major source of income for many Chinese, offsetting the relatively low per capita disposable income. This aspect is often overlooked. Recognizing this helps explain why, following a drop in housing prices, many Chinese people feel that their living standards have declined compared to before. Although property prices in China have fallen, the reduction hasn't been substantial. On a national scale, China remains 8th in the world for housing price-to-income ratios, meaning house continues to be a major burden for many Chinese. This problem hasn't been resolved by the drop in property price. Additionally, many individuals bought their homes before prices began to fall, so the decline in housing prices does not affect their debt repayment obligations. Consequently, lower property prices do not necessarily lead to an increase in consumer spending. The situation is further worsened by the fact that the slight decline in property prices hasn't eased the burden of high housing costs. Instead, it has started to erode the benefits that the real estate bubble once provided. The drop in property prices lead to widespread asset depreciation. More critically, as previously mentioned, the issue of income is central. A 20% drop in housing prices might only correspond to a 10% or more reduction in asset value. If property prices do not continue to rise significantly or only decline slightly, the potential for making a profit from real estate investment starts to diminish. This means that the primary source of additional income for many people beyond their salaries is beginning to disappear. With the stagnation in rising property prices, ordinary people in China have lost a crucial way to supplement their regular income. Although Chinese people seemed wealthier compared to those in Argentina or Russia, this was mainly due to the ability to gain wealth through real estate appreciation, not through higher wages. Now that the potential for wealth accumulation through rising property values has diminished, China effectively becomes a country where the average per capita disposable income is only $5,548, about half of Argentina's level. This positions China similarly to countries like Thailand, where per capita GDP is around $7,000 to $8,000 and the disposable income are comparable. As a result, the issue of low regular income, which was previously less apparent, has become much more pronounced. Problems such as inadequate consumption and the inability to afford raising children, which were somewhat mitigated by rising property values, are now worsening with the declining in housing prices. Of course, this doesn't mean that China's real estate bubble shouldn't burst. The real estate sector is clearly operating like a Ponzi scheme. The crucial problem is that after the bubble bursts, China lacks alternative sources of income to fill the void. China's economy runs on two primary cycles: the traditional cycle based on land finance and the current cycle driven by Xi Jinping's focus on high-tech industries, often referred to as the new trio: new energy, new materials, and new technologies. Fundamentally, both cycles operate in the same manner. They involve directing private wealth into state-led investments to enhance productivity, which then drives economic growth and increases household incomes. This in turn expands central wealth, creating a positive feedback loop of development. In contrast to the new high-tech industry cycle, the old real estate cycle had certain advantages. One key benefit was that ordinary people could participate in and benefit from it. In the traditional land finance cycle, housing acted as a means of involvement. People could share in the gains from rising property values. While I often criticize land finance, it's important to recognize that within this cycle, ordinary individuals could still reap some benefits. Buying property allowed them to enter the cycle and enjoy its rewards. In the new cycle established after the collapse of land finance in China, which shifts focus to high-tech industries, ordinary people are unable to benefit from the new system. Meanwhile, the government continues to amass national wealth, leaving China's per capita disposable income still quite low. In the new cycle, there are mediums for public participation similar to real estate. These include two main types: manufactured products like electric vehicles and the stocks of these companies. According to the logic of the old land finance cycle, products should act as a means of sharing benefits. However, electric vehicles do not fit in this role well. They are primarily consumer goods with technological features that cause them to depreciate quickly as technology advances. Consequently, they are not suitable for speculation, and their main advantage is offering affordable transportation. As a result, the medium for sharing wealth should be the stocks of these companies. Ideally, Chinese investors would transfer their previous enthusiasm for real estate to stocks of companies such as BYD, photovoltaic firms, and other high-tech enterprises. In the new cycle, these stocks should function similarly to real estate by helping to increase household incomes and address the challenge of lower wages in China. This is likely why the Chinese Communist Party is so focused on the stock market, constantly encouraging people to profit from it. Last year, the Economic Daily emphasized the need for residents to earn from stocks and funds as a way to boost consumption. This is not merely a superficial statement. The central government's strategy is designed to expand consumer spending and increase household incomes, which is crucial for the success of Xi Jinping's new economic cycle. However, this approach has not been effective. For example, over the past year, the stock prices of leading electric vehicle companies have largely been declining, with only the extent of the decline varying. The solar energy sector, another part of the new trio industries, hasn't fared much better. Many stock traders in China have echoed the sentiment that investing in solar companies has resulted in significant losses this year. A comparison of stock prices from several listed solar companies reveals a general downward trend. The broader Guangfa China Securities Solar Energy Index, which tracks the industry's performance, has also been steadily declining over the past few years, highlighting the overall challenges facing this sector. Several factors contributed to the difficulty in raising the stock price of these new trio industries. One key issue is the long-standing problems of market manipulation in China's stock market, where fraudulent activities and financial scams persist, leading to widespread disillusionment among investors. As a result, the Chinese stock market has gained a reputation as a challenging place for average investors to prosper. Additionally, Chinese investors tend to view stocks as riskier compared to tangible assets like real estate. Real estate has also been endowed with additional administrative perks such as access to better education, household registration aka 户口, and healthcare, advantages that a stock simply cannot provide. You can't, for instance, gain a 户口 by purchasing shares in local companies. In my view, the fundamental issue is that these companies' performance has been lackluster, and the new cycle promoted by the CCP isn't proving effective. The old land-based fiscal model worked by channeling national resources into infrastructure and development, boosting productivity and fostering societal progress, a strategy that has succeeded in many countries. However, trying to direct national resources toward driving innovation for economic growth is uncharted territory, and it's not working. No matter how much state media or influencers praise the new trio of industries, the truth is exposed when the financial reports come out. Very few of these companies are turning a profit. In such a scenario, how can stock prices increase? If these businesses aren't generating profits, there is no wealth to distribute. Regardless of the causes behind the stock market's inability to rise, the fact remains that Chinese citizens can no longer reap the benefits of the new trio as they once did with real estate. With the old method of supplementing income gone and no new alternative in place, the actual income levels of the average Chinese person have seen a sharp decline. The real estate bubble represents more than just a sector-specific issue. It reflects a broader failure of the Chinese economic model. The collapse of this bubble signifies not only the downfall of the real estate industry, but also a breakdown of the overarching Chinese economic framework. After the old bubble burst, China has not yet developed a comprehensive new model. While the previous land finance model allowed individuals to benefit from rising property values as long as they could make a down payment and enter the cycle, Xi Jinping's new economic model has turned into a one-man show. This shift has made it challenging for ordinary citizens to participate in and benefit from the new economic opportunities. Thank you so much for watching. If you found this video helpful, please like it, drop a comment below, and hit the subscribe button right here. It really helps YouTube suggest my video to others. I'll be back with more content soon. Until then, stay well.